This podcast includes information provided by the issuer and does not express the views of the interviewer. This podcast may also include forward-looking statements by the issuer that involve certain risks and uncertainties to its business. Because forward-looking statements are subject to risks and uncertainties, the issuer's actual results could differ from those indicated in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. You can follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT, and you are listening to episode 56. If you have any questions or comments, please feel free to tweet at me or shoot me an email at rkraft@snnwire.com. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on iTunes. It really helps provide feedback for me and spread the MicroCap message. For this episode of the Planet MicroCap Podcast, I spoke with Sean Peasgood. He is the president and CEO of Sophic Capital. Sean has been covering technology and clean tech for a number of years, and I thought it would be great to hear his insights on how to evaluate a potential investment in these sectors. I've known Sean for a couple years now and been following his industry insights. He has also contributed an article for the MicroCap Review magazine covering the technology and clean technology sectors. The goal for this episode is to learn more about how Sean approaches investing in tech and clean tech microcap stocks. Thank you again for tuning in to episode 56 of the Planet MicroCap Podcast. Please enjoy my interview with Sean Peasgood, but first, a word from our sponsor. Our House Grief Support Center provides the Los Angeles community with grief support services, education, and hope. This wonderful organization helped me immensely, and the Planet MicroCap Podcast is proud to support their upcoming event, The Night for Hope, on Friday, November 17th at the Palace Theater in downtown Los Angeles. Join the Our House Grief Support Center's Associate Board for a night of good friends and great laughs, featuring a lineup that includes some of LA's finest up-and-coming comedians. All money raised will benefit the Our House mission and continue to help the community in need. For more information, visit ourhouse-grief.org/hope tickets. I look forward to seeing you all there. For this episode of the Planet MicroCap Podcast, I have Sean Peasgood on the program. He is the president and CEO of Sophic Capital. Sean, welcome to the Planet MicroCap Podcast.
Hi, Robert. Thanks for having me.
It's great to have you on. So to start off, as we do, what is your background?
Yeah, so I spent about 10 years on the sell side, writing equity research, covering technology stocks, both with bank-owned and independent dealers. And then after following, smaller and smaller companies as I moved down from kind of the bank platform to the independent dealers, decided that, I wanted to get involved with actually helping microcap companies in the tech space, being able to navigate the capital market. So almost 5 years ago, I started Sophic Capital. It's a capital markets advisory firm and an investor relations company that helps smaller tech companies and clean tech companies with capital markets.
Mm-hmm. So you got your start investing in microcaps then. It was kind of just after you were done with that sell side experience, right?
Yeah, I mean, I would still play the market where I could. We had more handcuffs as far as what we could invest in when we were on the sell side. But I still would invest in things for kind of longer term themes.
Mm-hmm. So what was your first maybe introduction to microcaps, from that experience? Because something must have happened there where then once you became independent, you were like, all right, I'm gonna focus on these.
Yeah, I mean, I think what I saw was just, there were a lot of good companies in Canada, specifically in the market up here, where the founders had put a lot of time taking the business, from the private stage to get it public. And then there just weren't as many eyeballs up here because Canada is really focused on resource stocks. There was kind of a real great opportunity to take these smaller companies and really help them out. And, they really weren't getting the attention they deserved. And so that's really where I got interested. And, back when we were when I was at a smaller dealer, made some pretty good investments into some smaller companies and realized, the returns there could be very, very good. Albeit the risk was a lot higher, but the returns were ones that were definitely worth doing the work for.
So before I get into your microcap investing strategy itself, I wanted to ask you a little bit more about why you chose to get into the clean tech and technology space, because you've written for the magazine, also MicroCap Review, discussing these two sectors. So was it more of a circumstance? You came to the firm and they said, all right, Sean, you're the young guy here, you're doing clean tech and tech, or did you come in being like, all right, I have this background, this is what I want to do at the firm?
Yeah, I mean, it was a bit of both. So when I first started, came straight out of school and got an opportunity at one of the major banks here in Canada. And so part of that was, there was maybe 5 or 6 sectors that I was interested in working in. And then there was also, of that, there was maybe 3 openings. And so technology was definitely something that, I'm passionate about and have been for a long time. Got lucky because, turned out that one of those openings were there. But as they say in this business, you gotta land a job first and then kind of work towards your dream job. And that was really the strategy. So, I got lucky. I got embedded in the tech space, loved it, got really focused on that space. And so that's really why we continued to play out, working in that area. Really, after you spend 10 years following a couple sectors, it's easier to make money by doing what you know than trying to figure out a bunch of new things. So we really do specialize in those spaces. And I'd say, 90% of my personal portfolio as well is invested in that area as well, whether it's in Canada or the US.
Mm-hmm. All right. So now I want to get into your microcap investing strategy. What is your criteria when you're evaluating a new potential investment?
Yeah, so when we're looking at an investment or even at a potential client, we look generally for about 7 things, and we've talked about these openly in a number of different forums. But the first one is we're looking for something that's disruptive. So really looking for a company that has some form of disruptive technology. Alongside that, some kind of moat, whether it's patents or trade secrets. A lot of software companies can't issue patents, but trade secrets and personnel who know how to do things better than anybody else to kind of create and maintain a moat. A large market opportunity. So we're not really that interested, obviously, in a company that's going to disrupt a small market. So we size up that market opportunity and look to see how big that could be. Another big one that I think is really important for small companies is an initial large customer. And so we like to see not a customer, that's getting a product for free, but a customer that's actually willing to pay the market price for a product. And, if you can find a company that has these things and they have, just landed a really large customer, you likely have to pay up to, a little bit more than before they had that customer, but it's de-risking the situation significantly once, that first customer's come in. That's usually, one of the hardest milestones for one of these small companies to hit. The other thing we look for, high insider ownership. So we like management and board to have skin in the game. It's a bit easier with tech because a lot of these entrepreneurs founded the companies and took them public. So generally they are incented, but we want management and the board to be aligned with shareholders, and that will help. I mean, not always, but really de-risk them making bad financing decisions. And then, obviously strong management and board, they are, for small companies, management is really the key. It's probably the number one thing. If you have any issues with a management team or there's any red flags, look elsewhere, I would say. And we look at the entire management team. We're not just talking the CEO. Meet the CFO, CTO, figure out if these companies have the ability to not only win but also compete with the bigger companies when they are successful. And then I guess lastly, this is more of the financing aspect of it, but the capital structure. Look at how many shares are outstanding. Try to get a handle on who actually owns the stock, when they last raised capital. Understand it, if there's warrants and converts, and the pricing and the expiry on those as well.
Mm-hmm. All right, cool. So I actually want to delve deeper a little bit into a couple of these points. The first one being is this idea, and because this pertains especially with clean tech and tech, is this idea of disruptiveness. What does that mean?
Yeah, so I mean, it means a lot of different things to a lot of different people.
Sure.
I mean,
Sure.
I think for us, we look for something that's going to displace another product is one way to think of it. So it's a better mousetrap. It might be cheaper. It might be cleaner. It might be or greener. It might be a better solution. It may incorporate new and old technology together. I mean, one of the big disruptions that I think is taking place now. There's been, this is not my idea. This is out there in the world. But this whole idea of electric vehicles and the idea of now you have not only a computer on wheels, but you have all the pieces that can actually enable that transition to happen. And when you have the the chips, and you've got the lithium ion batteries, and you've got all the components to make that happen, the amount of, when you see disruption like that, it can accelerate to the upside extremely quickly. So people will say, oh yeah, EVs, they won't come in until 2050. Well, if I'm a betting person, this market will be disrupted significantly, much quicker. And a perfect example of that as well is Uber, right? I mean, they're literally taking technology that's already put together or already out there, and they're putting it together, creating a new disruptive business model. So even the business model could be disruptive, and seeing completely disrupting the taxi business. So I mean, I think I've kind of talked around disruption, but those are some ways to think about it. I think it's either a product, a process, or even a business model.
Right. And the reason I wanted to ask a little deeper about that, because that's like one of those key phrases you always hear when it comes to a new tech company, that it's disruptive, it's changing the industry, it's changing the game in some way. So I thought that would be important to kind of hit on, you know what I mean?
Yeah, no, definitely. And I mean, look, everybody wants to find something that's disruptive and going to win. So, yeah, I mean, I think not every tech company should be called disruptive, for sure. But if you could find, 10 things that you would want on a list, that would be one of them.
Well, I mean, in MicroCaps, I mean, what's your, you've been at this a while. I mean, how often do you see something that's truly disruptive?
Yeah, I mean, so I guess I've seen there's two answers to that. First off, there's a lot of disruptive tech. However, the key to being a good investor is to know that not only the tech is disruptive, but that the management team is going to be able to commercialize and take advantage of that disruptive technology. A lot of companies go to zero before they even are able to commercialize. And especially in the Canadian market, that can be tougher because a lot of companies up here are undercapitalized. I would say that the mentality in the US and elsewhere is, we're willing to put money into a company to see the top line grow. And as long as the top line's growing and there's no profits, no problem. We'll keep kicking capital at that because, eventually you'll see profits to the bottom line. The mentality in Canada is a lot different, especially in microcaps, where companies are forced to, I think, make the wrong decisions to try and become profitable too early. And really, that's just so that they can access capital. But yeah, so my point is really, I think there's a lot. I think it's the commercial aspect in getting those disruptive technologies to market. But I have seen a number of them for sure.
Mm-hmm. Well, that segues perfectly into one of your other 7 things that you mentioned, and that has to do with you look for strong management and board. So what are some of the characteristics you look for in management of these technology and clean tech companies?
Yeah, so I mean, I guess first off, it's the entire management team, right? So looking at the entire management team and making sure that there's the right, not just the right CEO, but the right CFO, the right CTO, COO, if there is one. Some of these small companies, don't even have all of those titles. But the right people in place to make sure that, you can actually commercialize the product and that you do have a vision to do that, and you have the capabilities to be able to execute. We also, look at history. So have they been successful in the past? Have they made investors money in the past? If there isn't a history there, then don't just rely on what they're telling you, right? I mean, you try and talk to other investors or other industry professionals who may know them. That's probably one of the best ways to do due diligence and on management teams, I think, is just speaking to people who they've worked with and other investors that have either invested alongside with them for a long time. How open are they? How honest are they? Are you able to talk to them? And then obviously, because it's technology, the technical expertise has to be there. Not always with the CEO. Sometimes that might be the CTO, the group of engineers that are on the ground. But generally, especially before we take a client on, not always for personal investment because it may be tough. Try to get out there and put boots on the ground and meet these companies. The other thing that we do a lot of is we go to industry trade shows. So not investor trade shows, which we do as well, but I'm talking about, drone shows about drones or, industrial Internet of Things, or some of these themes that our clients or that companies that we know play on, so that we better understand the space, and that's a great way to kind of get third-party validation on the management team as well.
Mm-hmm. So we are talking about the tech space. I mean, what's your appetite for investing in companies where it's a 22-year-old CEO or a 20 some guys that may not have that track record.
Yeah, so I think in that case, you need to go to the next layer, which first off, there's a lot of really smart 22-year-olds that have made a lot of people a lot of money, right? I mean, let's go back to Facebook and all these other tech names. So, but I think, there are other key individuals that came into those businesses that probably de-risked that issue. And the other thing then is the board. So how strong is the board? And I would say not just microcap companies, but small cap companies. This is generally an issue all around. So, trying to look for companies with great boards. You may never make an investment in your life, and especially in the microcap space. So the board is always a work in process, I would say, trying to improve them. But, if you're going to invest in a company with a young CEO who's never done it before, understand the tech, understand, where they're going. And I would say, in that case, you really want to make sure the board's in place and the oversight is there to make sure that, things are going well. But, everybody has to start somewhere, right? So sure. I wouldn't discount it.
So another point I wanted to hit on from one of your 7 things is the last point you talked about, and that's the capital structure. For you, what's your ideal cap structure for potential investment?
Well, ideal cash on the balance sheet.
Yeah.
cash on the balance sheet. No warrants outstanding. No debt. No convertible debt. Right. I mean, for a small company, that's the holy grail, right? It means that there's no warrants in front of you. There's already cash there. Generally, though, that's usually there's some warrants there's some warrants there that you've got to watch for. And I think it's okay if they're there. I just don't think enough people think about that. And so, understanding when warrants need to be taken down and who owns them. If you know that a big institution owns a lot of warrants and they also own a lot of free trading stock, then as we roll closer to the date, and the stock's way up, there may be, just some breathing room coming in or a need to find new buyers. And so, this is more not really a long-term issue, but it's more of a trading issue as far as if you're looking at entering a position, you may just want to be aware of these things.
That's I was going to say, I wanted to hit on that real quick because, in microcaps, we have our best of all possible worlds scenarios. And I've asked that, on the podcast ad nauseum. But, let's hit on the, if there was some kind of hair, you know what I mean? If there's some hair on this deal, what, in your opinion, are some of the at least bearable hairs that you can deal with for like the short term, but you keep them in the back of your mind when you're considering it as a more long-term investment.
Yeah. So, I mean, you know what? Every situation is so different.
Sure.
It's a tough question. But I mean, I can think of an example in my mind where I was so blown away by the technology and I was so excited about the patents and what it could do, that, the fact that there were some warrants outstanding and the company didn't have enough cash to get to, I wanted to own a position, and be there, right? So, and the other thing is warrants could be a great issue. It can be a great thing if the company knows how to manage warrants and knows how to get them, exercised. It's a source of financing without really the perception of dilution, even though you are actually adding, dilution to the cap structure. So, I think warrants are really. I don't like them. I don't like them for a technology company, but unfortunately, that's just part of kind of where we live in the capital markets. And so, a lot of these companies have to do, especially up here in Canada, 4-month hold paper. And so, people aren't. It's not like a free trading piece of stock that people are getting. And so, to incent them to hold it for 4 months, they've got to get a half warrant. I understand all that. I really don't like converts, especially converts in the hands of people who own free trading stock as well. It depends if it's management. It depends who owns these things too, right? It could be a number of insiders where you can keep track of what's going on. I think a big key here is to understand who owns what, and understanding the timing behind it, and understanding the capital needs, as far as like tech companies always need to raise more capital, or it seems until they become profitable. And so a lot of these microcap companies have to continually come back to market. So you just want to be aware of this stuff.
Right. So Sean, outside of the 7 factors that you look for in a potential new investment, when you're looking at technology and clean tech companies, are there any other key factors that you also look for?
Trying to think what I said now. Yeah, I also who are shareholders. So who owns the stock, who owns the company. I think that's important and can be telling. Along the way, I would say, rather than, those are kind of the initial things to look at, but along the way, I want to see continued progress, things moving forward, management doing what they said they were going to do. And to be honest, the board improving, from where it started. So I always like to see the board getting better. Whether that's industry professionals, people who understand capital markets, even additions where the new person's coming in to kind of keep an eye on the company from a larger, not competitor, but someone that could be strategic. I think those are the kinds of things I look for along the way.
Mm-hmm. So, Sean, I should have prepped you. I should have told you that I'm going to be throwing some curveballs at you today. I didn't know it myself.
That's okay.
So, another point I want to ask you is, do you also focus specifically on Canadian microcap stocks as well? And I think, right? And if so, why?
Yeah, I think, well, first off, we're in Toronto. It's, the space that we know really well. As far as a firm, it just makes more sense, especially for what we're doing from an advisory perspective. We have access to, the institutions here, the brokers here, and we're starting to penetrate the U.S. market as well. But, there's not as many U.S. companies that want to, come up to Canada and do a roadshow. So yeah, we focus here. I like it up here too because there's not as much focus on tech, and so I think it creates an edge as far as being able to get access to these companies, understand what's going on, and then a lot of the investor base generally starts here. So.
I was going to say, will that ever change? I feel like that's been the case for the last, I don't know, I've been doing this podcast since July 2015, at least since then.
Yeah, it's been that way by like the whole, even you get into, small mid caps, those companies get bought by much larger US companies. That's the exit. I mean,
Right.
if there's a successful company in tech in Canada, generally that's your exit, and that's how it plays out. There's a lot of people up here making a lot of noise about the government trying to do a lot more to maintain, not only the engineering talent that's in this country, but also to get more funding for these small businesses. We have a great technology scene here, Waterloo, Vancouver, Montreal, Toronto. All those are, even Calgary has a little bit. All those are big tech centers that, Amazon's moving to Vancouver, right? So these are, or they're moving their second headquarters there. So these are big opportunities that I think the government and people in the country are missing out on. But it hasn't. You're right. It hasn't changed. So let's hope it does.
So Sean, what experience do you draw upon that taught you the most about microcap investing?
What experience? Yeah, that's another tough one. It's a great question, right? I mean, there's so many different case studies as we have seen over the last couple of years.
Usually, it's a win or a loss.
Yeah, those are the ones that
Right.
I've remembered. Every single one of those. Tell everybody about the winners and tell no one about the losses. So yeah, no, I mean, I guess the one thing is that these things can move extremely quickly. So, if you think of a microcap that's 10, 20, $30 million market cap, and they actually have something that's disruptive and starting to grow, and all of a sudden they get a PO for, $6 million, or they get a PO for even $4 million. Like a small order for a small company can mean so much and can really, that can be the beginning of something that is so much bigger. And so I guess I've seen that a number of times where, where you're investing in, even small caps, it can take a lot longer. So I guess the biggest lesson is, for one, patience. You need patience. You need to be vigilant. You need to stay on top of your stories. You need to be paying attention. Things change quickly in this market, both positive and negative.
Sure.
And especially, so not only are you adding the microcap risk onto the plate, but you're also adding technology, and you think you have a disruptive stock until someone else is disrupting you. And so, competition kills stocks in this space, and things change quickly. So yeah, I mean, I think that's really the big thing that I've noticed is, things move quickly. You may think that you've got a huge winner and you should sell it, and you look in the rearview mirror 2 years down the road, and you had something that was so much bigger that you didn't realize at the time. So, and then at the same time, something goes badly and you don't think it's that bad, or you get emotionally connected because you've had that long time that you've been working with the company, or that you've been owning the stock, and you don't notice, and the next thing you know, you're heading in the wrong direction, and that can be quick too.
Right. So just to quickly follow up on that. So in your experience, what was that learning lesson that, like at least for the first example where, you're looking in the view mirror and you see, oh man, I really had something. I mean, did you then teach yourself? I'm just imagining that you would probably, I guess, if you think you actually really have something, you just take out your principal and then just, let it fly, and so to speak, or, how would you handle something like that?
Yeah, so everyone has a different view on that. I mean, I think originally, yes, taking out your original investment, and it depends where the stock is. I mean, sure. I think the thing is, you have to you should probably put in place some kind of rules, and look, I don't do that all the time. But if you're very, very disciplined, you should put in place some kind of rule that says, hey, look, if the stock doubles, I'm going to take out a third of my position, reevaluate, and if it keeps going, then I might take out more. I think as long as you're paying attention and you know what's going on, and you can justify the valuation, I don't think there's a need to do that. And I think, lightening up when things are going well, I've met a lot of really good investors that use the exact opposite philosophy, and they make way more money. And so, there's no hard. I think it's good for de-risking the situation for some people, but I also think, to be truly confident and understand what you're investing in, the opposite would really play out. Oh my God, management did exactly what they said they were going to do. The stock just doubled, and they're telling me that they're going to do something similar again. And you shouldn't sell a share, right? You should be a buyer.
Right. So you actually, in that last answer, in the last two answers, you kind of hit on my next question, but I figured we could put it all together. What are some advice that you have for new microcap investors looking at tech and clean tech in Canada?
Yeah, so I think first off, invest where you're comfortable. Everybody has an expertise or knows more about a sector than somebody else, and if you're just starting, that's where you want to go. I would also say, be aware, but be cautious of kind of third-party research and try to do your own work. There's a lot of fake news out there right now. I just say, do your own work, and if you have an expertise, then doing that work will be easier. I think what we talked about before, pay attention to, capital structure, understand the cash requirements of the company, understand the burn rate. One thing that people can get in trouble for is they get really excited about the growth prospects of a company, and they don't understand the working capital requirements, so they don't understand that, the company's going to need capital. So really dig in and understand one of the worst things that can happen to a microcap is that they need to raise capital, and then everybody finds out that they do, and everybody tries to get out of the way of a financing. So, really try to understand the balance sheet and the working capital requirements and the capital structure, and try to invest alongside some smart people. Try to find, companies that someone's already done a lot of work on, that you either trust or, follow the smart money kind of thing. Can also be helpful as well. And hey, it's microcap land, so don't go out there and bet the farm when you first start, right? Go out there and pick away at a couple names, follow them, give yourself confidence, make sure that what you're doing is working. And if it's working, then, maybe take a bigger bet. But, don't go out there and take all your money and put it into a couple names and hope it's going to work, because, these stocks are volatile. They can take longer than what people think. And so, I would just say take a cautious first stab.
Right. So, Sean, where can my audience go and find more information about you and Sophic Capital?
Yeah, so we have a website, www.sophiccapital.com. All of our contact information is there. We also do some research, so we actually have some research reports on, more industry research. Some of those touch on our clients as well, but those are all on our website under the research section. And then we're on Twitter at Sophic Capital, obviously LinkedIn and Facebook, and we update those social channels with industry news, interviews, and then some pictures and details when we're at some of these industry conferences. So you can find us there too.
Sean, I want to thank you so much for joining me today. I really do appreciate it.
Yeah, thanks for having me, Robert. That was great.
Talk soon.
Okay, bye.
Thank you all for tuning in to the Planet MicroCap Podcast, and thank you, Sean, again for coming on to the program. You can access the podcast by going on to stocknewsnow.com under podcast, go to podbean.com and search Planet MicroCap Podcast, or on iTunes and search Planet MicroCap Podcast. Stay tuned for the next Planet MicroCap Podcast, where we'll have our next guest to discuss all things microcap. If you have any questions or comments about the podcast, please send an email to info@snnwire.com. I'd love to hear from all of you. This podcast has been brought to you by SNN Incorporated, publishers of StockNewsNow.com, the official microcap news source, and the MicroCap Review magazine. I'm your host, Robert Kraft, and thank you again for joining me on the Planet MicroCap Podcast. Have a great week, everyone.